It's Ask the Tax Lady with Esther Gulius and E.G. Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady. And I know probably you're saying, oh, my gosh, turn off the radio. We don't want to hear about taxes. But I'll tell you, what we got planned for you this summer is to kind of go into all forms of synergistic things that have to do with taxes and your money. And that's kind of what we're rolling out today. I have in studio with me Tiffany Fabian.
Hey there, Esther. I'm so alive.
I'm telling you, it's alive. Good. It's good after tax season, isn't it?
Yes.
And Chris Fabian. Hey, Chris.
Hello, Esther.
All right, so what we want to talk about is, first of all, we want to thank everybody, our loyal clients and listeners, because it was another successful tax season. The end of this tax season, I've never seen anything like. I say that every year, but it was remarkable. People that normally file in February and March came out the 17th and 18th.
And we did so many extensions too. So many extensions to file. Just people were calling.
Couldn't get their poop together.
Couldn't
get their poop together. So, but we want to talk about if you're somebody that because obviously we're going to talk about taxes. That's what we're experts in. But when you are a tax expert, you go into all these other things like senior citizen issues and taxability of items and
retirement issues.
Right, and how to run a company and retirement, like Tiffany says, retirement issues and rental property. And what we're going to do this summer is we're going to talk about all kinds of things that impact your taxes, but mostly impact your finances.
That's right.
And we want to talk about that. The other thing is if you're somebody with a large balance due and you can't pay it, and maybe they're garnishing your wages, or they're taking it out of your Social Security, and you just don't think there's anything you can do, that's something that we can help you with. Right, Chris?
That's right. We do what the big TV firms do. We do the offer and compromises. We help people with payment plans. We help people just get their act together so it doesn't happen again.
And another option is putting you in an uncollectible status.
Yep.
That's also an option. So it's just sometimes just a phone call to the IRS and them running the numbers, seeing how much you have to live on each year and your each month and your expenses.
It's interesting because yesterday there was a gentleman in our office who thought he owed a lot of money, and he didn't want to come in. He hadn't filed for 3 years because he thought he owed so much money, and he just thought, I'm just going to add insult to injury. Well, the return that he had from 3 years ago wasn't done correctly, so we fixed it. He didn't owe anything, and he got refunds for the other 2 years. And, it's sometimes you don't want to go and find out what to do to make it right, because you think, it's just going to be so depressing. But many times when you're all done with the process, you walk out and say, wow, I wish I would have done that a long time ago.
Yeah. And I met with a client yesterday, and the truth was somebody claimed his dependent child. And so in order to get the return done electronically, he kicked off the child. But now is the time to come in and make things right and amend it and put that child back on. And then the IRS is going to make that person
All right, let's say this in a way that people will understand. Why would somebody kick off a child? So when you file electronically, if a dependent that's on your return had been claimed by the other parent or somebody, that return is going to reject, right?
Correct.
So in order for the return to go through, you have to take off the dependent. The
person who really is your dependent.
But if you know legally, under the divorce decree or because you're the custodial parent, legally that you should claim that child, what you have to do next is do an amended return. Put the child back on the amended return. Apply for the refund that you didn't get. They will hand process it, and they will go after that person who took the dependent illegally.
That's correct. That's right. And don't sit back and let this happen, because you're entitled to claim that child. And so you want to get the precedents moving in the wrong person and let that person know, I'm not going to take this anymore.
Right. I'm Esther Gulius, the tax lady from E.G. Tax, 803-0930, 803-0930, star 930 in a cell phone. The letters are going to be starting to come out. One of the, I also have a cold. I got it the day after tax season. One of the letters that are coming out from New York State is to ask for your W-2, right?
Yep. Yeah,
I mean, they know.
Got a copy of it.
They got it. I mean, but anyway, that's a reason to hold up your refund. Don't get frustrated and don't think, oh gosh, they're after me. They're not after you. they're holding up your refund.
Another big letter that we're seeing a lot of is people who got health insurance through the marketplace, and so either you didn't do the 1090, the form that you need to do, the 8965, 62, in order to tally up, or you didn't get the 1095A. So now you're seeing a lot of those forms from the IRS wanting you to make the balance sheet correct for your health insurance.
Right,
so
because maybe you're going to get a bigger refund because you could get the premium tax credit.
That's
correct?
right.
Or some people are going to have to pay it back. So whether that's your situation, or if you're getting letters, or you're getting those stupid phone calls from the scam artists, join us here in studio, 8030930, 8030930, star 930 on your cell phone. Well, let's go over what we're going to cover this upcoming summer. What we're going to talk about next week is how to make money once you retire.
Yeah.
You know, seniors are really getting squeezed.
Yes.
Because their Social Security isn't going up.
The cost of their health
But the cost of their health care, their Medicaid, is going up.
That's right.
So they're getting smushed. And so we're going to talk about retirement issues, like how to maximize your income, how to minimize your expenses, how to downsize, looking at a reverse mortgage.
Right.
You know?
That's a viable option.
Right. I mean, those are all things that you should be putting into your thinking cap, and that's what we're going to talk about next week.
I know I have a lot of retired clients, and a lot of them will work for car dealerships, and they'll deliver cars, and they really enjoy it. It's sort of on their terms, at their schedule, what they want. And the truth is, if you're working for an employer and they have a 401k, you can still contribute to that even though you're retired.
That's correct. The other thing that's key for seniors to know is their income taxes. They certainly don't want to pay any more taxes than they have to pay. So that's another thing we're going to talk about next week. Then after that, we're going to talk about, and this is all during the summer, making the most out of your job, right? Taking advantage of the cafeteria plan at work.
That's right.
Your health care, your daycare, pension plans, employer contributions, IRAs,
HSA.
pension plans, all those things that are available to you as an employee that you should be looking at.
Yeah.
And maybe you're not being paid as an employee, and you should be paid as an employee.
That's right.
And what you can do to make the employer put you on as an employee.
Right. Because, of course, when you are treated as a self-employed person, when you're not, the burden of paying for all that Medicare and Social Security all falls on you. Now, where if the employer did it correctly, they would have to pay half of that burden.
That's exactly right.
So they're trying to get away with it.
Plus, you aren't able to collect unemployment.
Right.
Okay, I'm Esther Gullius, the tax lady from EG Tax. Love to hear what you have to say. 8030930, 8030930, star 930 on your cell phone. We're going to take a short break. We'll be back with you and your calls after the break. All right, I'm Esther Gullius, the tax lady. Okay, that's for the Queen?
Yeah,
Who
it's
is
her
that?
song. It's called God Save the Queen.
Wow.
It's kind of anti the Queen.
Wow. Well, Tyler Samer likes all that unusual music. Me, I'm like a Benny Goodwin kind of guy. But anyway.
The Queen. I thought you were going to play Queen itself.
Yeah.
Oh, I could.
Little Freddie Mercury.
Next time.
Yeah, we could do that.
I'm Esther Gullius, the tax lady from EG Tax. We're talking about things we're going to talk about this summer and things that you find interesting. We're inviting you to give us a call, 8030930, 8030930, star 930 on the cell phone. And let's go to Lou. Hey, Lou, how are you?
Hi.
Lou, how are you?
Enjoy the show.
Thank you, sir.
Hey, maybe I'm going to stump you today. I don't know, Esther.
All right.
Just simply, I am a part-time bookkeeper.
Okay.
We have one paid employee, the executive director.
Yep.
We pay $1,000 per month to a local health insurance company for his health insurance premiums, family plan. That's $12,000 a year, right?
Right.
Nothing tricky yet.
Nope.
Now, out of his check every week, we take about $50 to defer the cost to our organization. We take $50 a week and, book it as a contra insurance expense.
Right.
Okay. So that comes to, I don't know, let's say it's $2,500, or actually a little bit more. But anyway, my question is this. At the end of the year, I was instructed to issue a check for the total amount that employee had withheld from his checks each week to defer the insurance, and that would be a tax-free payment to him under some kind of IRS healthcare reg. I don't know, and it's tax-free, which seems so strange to me, but I was assured by very knowledgeable people that it would be a tax-free check that I got to.
Lou, the only thing I could think of why they're saying tax-free, and you can't cut a check, that would be income, would be you can deduct it from his pay before taxes. Right. So if he were to get...
Because that's an expense for health insurance on a pre-tax program on health insurance. But I can't see that he would get a check.
Well, that's exactly what I did. I cut him a check for all his donation.
See, because it should be pre-tax. So if it's pre-tax, then he isn't taxed on it, and it should reduce his overall income. Right, Chris? Wouldn't you agree with that?
Yep, that's what I would say. Or if it was going into an HSA, you would make the contribution into an health savings account for him, so then he could use that money tax-free when he turns in his medical receipts.
Yeah, that's what I thought, but that's not the case. So, okay, I guess that answers.
Well, you know
my
what?
question.
Why don't we do this, Lou? We will double check during the week, and next Saturday we'll give you an answer.
Okay, I'll be listening for sure.
All right, thanks, Lou, for calling.
Thank you guys.
Have a good day. Bye-bye.
That'll be my assignment. I'll put it on the board.
Yeah, because it should, any cost you incur for your health insurance, which is part of your, pre-tax cost for health insurance, ought to be a pre-tax deduction.
Right, but they cut him a check.
So that would mean it's back to being taxable.
Right. That's what it would seem to be. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Speaking of the insurance, and we're talking next week about seniors making the most of their money, if you're a senior who's retired and you are trying to make ends meet and you're not working and you haven't quite reached Medicare age, one of the things that we can help you with is the New York State of Health.
That's right. Yeah, Tim Eliason is our healthcare navigator. During the tax season, he works all year round, but when it's not tax season, he works on Mondays in our office, and he has a dashboard, and he can hook you up and find the best solution for your healthcare needs.
Right, because many times people that retire think they need to pick up their COBRA plan. And the COBRA plan may be a great plan, but it might cost you twice as much as what you can get through the New York State of Health. And that's part of the other thing that we want to talk about is the New York State of Health and Obamacare. I'm not a big proponent of Obamacare, but it's out there. And if we can save you money, that's part of what else we want to talk about. The other thing is, in a few weeks, we're going to talk about getting a handle on your credit, which is really, really important. We're going to have on an attorney that'll talk about bankruptcy, how to turn your credit around, looking at your credit report, reading your credit report, all of that kind of stuff. Why should you want to do that, pulling your credit? It all ties into this whole identity theft thing.
That's right. Yeah, there's an app that I have on my phone. It's free credit. It's Credit Karma, and it's a free app, and it's a great tool. You can monitor your credit, because if it takes a nosedive, there might be something suspicious that's going on.
Well, it's entirely possible that somebody has not only stolen your identity, maybe with your tax return, but has opened up credit in your name. And they've run up a credit card, and it's on your credit report. And the only way you'll know is if you pull that credit report.
Yeah.
So that's another... It's another show that we're going to be doing in the future. Another thing we got planned is estate planning. Mm-hmm. And this is especially important as we age. We want to make sure that our heirs get as much of our assets as possible. Should you gift your house? Should you not gift your house? Should you do a life estate? Do you have to pay estate taxes? Things of that nature.
Yeah, there's nothing sadder than seeing somebody who's worked their whole life, saved their whole life, done the right thing, and then all of that goes to the nursing home, and it just sort of breaks
It
your
really
heart.
is sad. And a lot of it has to do with realistically looking at our situation and telling ourselves the truth. I see a lot of people that are getting a little older. It's hard to say, gee, do I need somebody to help me with my finances?
Right.
You know, should I get a power of attorney for my child so that they can help me in the event something bad happens? Those are kind of sobering things that, you know, I think that we need to talk about.
Yep, and we're going to have another attorney on who will help us to navigate some of the law.
Right,
and
Jeff Katz, who's a
Katz.
specialist in that. So I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 is cell phone, and we have our friend from Atlanta on a phone. Not Atlanta. Are you from Atlanta, Larry?
Well, honey, yes, I'm Esther. Esther, hi.
Hi.
A couple of things. One, I want to ask you if Chris and Tiffany, if you got my care package.
Got it yesterday, Larry.
Good. That's one. Two, I'm working on tying up the loose ends that information that you need. So I'll give you a call Monday on that. Three, Esther, I don't know if it's just me, but I've been having a hard time for a while getting the stations or your shows streaming over the internet.
Huh.
So.
That's a
Well,
good.
that's
Larry,
that's
I'll
something
talk
we
to,
have to take with
talk
the
to-
engineer.
To Debbie, I'll send
Yeah,
her
we'll
a
find
note.
out.
So
Okay.
you're having a hard time. Was it back and going on for a few weeks, Larry, or how long?
No, actually, for longer than that, Esther, longer than that. So I can tell you, thank God for your podcast, but I just want to pass it on.
Oh, thanks, Larry.
You're very welcome. Guys, that's all I have for now, and I'll give you a call Monday.
All right, Larry, we'll take good care of your taxes.
But you didn't send any peaches up when you sent your package, by the way.
Chris, they're on the way. They're on the way.
Okay.
All right. Thanks, Larry.
Bye-bye.
Bye-bye. That's Larry from Georgia.
Yeah, and
He
then
listens. He streams. BEN streams online, so he listens to us in Georgia. He said that he was looking for a tax show, and we're the only one in the United States. So we're really thankful for Larry, right?
Yes.
Larry.
All right. Well, let's go back to the phones and talk to Tony. Hey, Tony, how can we help you?
I have a dumb question.
No, you don't, Tony.
Oh, yeah. Well, this is what I wanted to ask you. Now, your screener said it's not a political show. I understand that.
Okay.
But here's my question. And every single one of those horrible debates, whether it's been the Republicans or the Democrats, somebody always has to toss in this remark. We're going to make those rich people pay their fair share. And I mean, I don't know. I'm not a tax person, but I kind of got the impression from some people I know that do have a little money that they pay excessive amounts of tax. I mean,
It's true. It's true. You know, I have to tell you, Tony, as a tax professional, it's very frustrating when you listen to, because it's very popular to believe that there is a tooth fairy and there is pie in the sky. I mean, that's what you really want to believe. But once your income gets a little over $100,000, a lot of the deductions that are out there start to go away. So much so that when somebody's making $200,000 or $300,000, which is a lot of money, they really don't have much in the way of personal exemptions left. They start to lose their itemized deductions. All of their deductions for itemizing, many of them, if not all of them, turn into alternative minimum tax.
And then they also get hit with the new Obamacare tax.
Right. So if you take a look at the stats, you'll find that the upper 1% are paying like 30% to 40% of all the taxes in the United States. So, you know.
Excuse me. When you use this term, the upper 1%, to be in that tax bracket, that category, what kind of cash do you have to be making?
Well, to be, I don't know exactly what they're talking about, the upper 1%, but if you have taxable income of over $230,000, you're in the 33% bracket. So that's right up there at the top. The top bracket is for people that have taxable income of $464,000. They're paying 40% federal and about 10% New York State. So you're paying almost 50% of your taxable income. Now, what happens is they do marginal taxes. See, when people take a look at what their tax liability is divided by their gross income, that's what their marginal tax bracket is. Most people are in the 10 to 12% marginal tax bracket, And so when you heard last year, a couple of years ago, actually it was back when Obama was running, that Warren Buffett's secretary was in a higher tax bracket. They were talking about his marginal tax rate was lower because so much of his income was derived from capital gains. So that was before the Obamacare thing. Mm-hmm. So he was at 20%, and maybe his secretary was at 25%. But believe me, his 20% on his billions was millions of dollars.
Can I ask you something?
Yeah.
When somebody, like some stooge like me, goes to figure out what they're really paying in taxes, should I or anybody, any of my friends or anything, should, like, when you want to figure out your true tax rate, should you also figure out that everything you buy, you pay 8 3/4%?
Well, I mean, income tax. There's income tax, sales tax, real estate taxes, that's estate taxes. There's state tax. There's estate taxes. So we're all paying a whole bunch of taxes. But from an income tax standpoint, if somebody takes a look at their real tax liability, that would be what you really pay before you apply your withholding, and you divide that by your total adjusted gross income, people will be shocked to find out what a low rate they're really paying. And almost half, if not half, of the people not only don't pay anything, the federal government gives them money.
Now, I happen to have a tenant that collects social services, and it astounds me how this is possible, but I believe she told me she got back like $6,000 or $7,000.
That's correct.
Sure. Does she have children, Tony?
Yeah.
Well, when you are a single parent or someone with children that are under the age of 17 that's in your home and you work and your wages are between 12 to 18,000, your federal refund if you have 3 children is about $3,000 for the earned income credit,
right.
And then if you have 3 children under the age of 17, another $3,000 in additional child tax credit. Now that's 11, and then on the state of New York you get another 3, so that's $14,000 of money you didn't pay in, and people don't know that. So, thank you for calling, Tony. Very enlightening conversation.
Okay, nice.
Thank you, sir. I'm Esther Gulias, the tax lady from EG Tax. 803-0930, 803-0930, star 930 on your cell phone. We are out of tax season, but we are not out of things to talk about relative to your own taxes or any situation that you want to bring up. 803-0930. See you on the other side of the news.
There you go, huh?
There's that's Freddie.
Yeah. Now that's Queen, but
Yep.
it ain't the Queen in England.
We're getting closer.
Yeah. I'm Esther Gulias, the tax lady from EG Tax. Hey, thanking all you loyal listeners and clients of ours. We had a great tax season. I have to tell you, there's no relief like after April the 18th in this, this thing. And all the returns are done. Hallelujah. God's in his heavens, all right in the world. But just because it isn't tax season doesn't mean that we don't have things we need to talk about. So we're kind of reviewing what we're going to talk about this upcoming summer. We're going to talk about how to make the most when you retire, making the most out of your job, getting a handle on your credit, estate planning. Next thing is other forms of income.
Yeah, because Tony was just on the phone and he was talking about his tenants, and so he must be a landlord.
Right.
And so we were going to talk about rental property.
Other forms of income, investment property, how to get out of, how to sell your rental property without it costing you a ton in taxes. And we're going to have Russ Gullo here who's going to explain about exchanging.
And going back to Tony, sorry.
Yeah.
He asked, what is the 1%? Well, fast.
Chris got that.
Yep. Fast Google search. Back in 2013, the top 1% was someone whose adjusted gross income was over $428,713.
Which is a lot of money.
It's a lot
of money, right? But they're paying the lion's share of the freight. So it's interesting when you listen to politicians how they can skew the. They make you feel any way you want. So anyway, coming up, we're going to talk about securities. We're going to talk about self-employment, how to maximize your profits, things you ought to be looking at if you're somebody that's self-employed. right? A lot of the business credits that people aren't aware of, like restaurateurs, I don't even know if they know that there's a tip credit that they can get on their tax return. Starting a business from scratch,
There's a lot to do there, and so
lot to do there. Starting a business from scratch, how not to pay people under the table. People say, I want to pay people under the table, and we're going to show how that's not so hot for a lot of reasons, right?
Definitely.
And then insurance issues, health insurance, Obamacare, liability insurances, annuities, life insurance, auto, home, and casualty. All those things have to do with your taxes, but it has to do with your income too.
That's right. It all ties into one, and so you want to pay attention and find out what it is and where they relate to each other.
All right, I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. And by the way, all of you, the Americans that have money in Canada, we want to talk about F-bars and things like that because that's a big thing.
You know, and speaking of, with politicians and what he said, we had a nice conversation with the gentleman the other day, and he asked, what are you going to do if there's that postcard that just says you owe 10%? If you remember that conversation in your office.
Yes, I remember that conversation.
Quite well. But, and he even brought up, and he worked for a government agency. He goes, well, what about the self-employed? Are they going to get paid tax on the gross, or how do they prove their net? What about the stock sales? What about,
right.
I mean, and that's why, you can't just say, 10% sounds great. There's so many different vines that get entwined and involved in the tax code.
Like Tony was saying, the tenant who got a $7,000 or $8,000
the landlords,
refund,
Yep.
And so you really want to take into account
well, that's what we said
credit.
to him. We said, so much of the tax code is welfare.
Right.
I mean,
social
is
programs.
absolutely. They want you to modernize your house and put in better energy. Then they give you a credit, right? Okay, let's go to the phones and we'll talk to Mr. Chris from Lancaster. Hey, Chris.
Hi.
How are you, dear?
I'm great. I have two questions.
Yeah.
The first one is I always pay at the end of the year my taxes.
Yep.
They take it out during the week, but then at the end of the year I pay. How much can I owe before I get a penalty?
Well, it's different the federal and the state. On the federal, you would get a penalty if you don't have 90% of last year's liability paid in, or $1,000, whichever is lower.
Okay. One more question. If I had,
but on the state, it's what
$300.
$300. On the state of New York, it's $300.
But we would know that when we had to pay our taxes, we would know it.
Because they send you a bill, but you also would do a form to get rid of the penalty. Yeah.
Okay. And then the other question is if you had a job and it was under $500, you don't have to claim it?
Not true. Where did you think that was? Why would you think that?
If it was under $500, I thought that
they don't issue you a 1099 per se.
Or W-2 they always issue, 1099.
Right. But if you got a W-2 and you didn't put it on your tax return because it's under $500, they would send you a bill in the summer because that's not correct. And if you were self-employed and it was under $600 and they didn't issue a 1099, that doesn't relieve you of the responsibility of claiming it. It is taxable.
Okay.
So even though they don't send you the forms, or perhaps you got the form and you didn't put it on your return, it has to be included, Chris.
So if they said that they weren't going to issue a 1099 and they didn't send me a W-2.
Okay, but here, strict adherence to the law, just because you didn't get it didn't relieve you of the responsibility of putting it on your tax return.
It's sort of like a bank won't mail you a 1099 INT if you receive interest less than $10 a year, but you still have to include it if you earn $3 of interest. Does that make sense, Chris?
Okay.
And the truth is, I've seen this so many times, is that you've received $400 for 1099 income, but if you include all your expenses, it ends up being a deficit. So it would help you in the long run a lot of times.
Many times. But many times, especially if it's a small job, when you take the expenses, maybe the travel to get there and some of the office supplies and things of that nature, you are able to wipe it out anyway. But are you supposed to claim it? Yes.
Okay.
All right.
Thank you.
Thank you, Chris. Bye-bye. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. People say to me all the time, what do you guys do in the summer? Well, we go from 30 offices in Western New York down to 1. We have our corporate office that's open 9 to 5, Monday through Friday, okay? So we take care of all situations out of the one corporate office. But we do, what would you think, 15 to 20 returns every day?
Oh, every day? Yes.
Yeah.
Yep, we
Yes.
do a ton. I mean, you said tax season's over. Well, that's for the good people. Hate to say it, but there are still a ton of people out there that still have to file, like Tiff said, who filed extensions, or maybe there's people with 3 years, 4 years, 5 years worth of returns that have to be done. It doesn't mean, they haven't wrote me yet, I'm scot-free. That could just mean you just lost a lot of money.
And you know what? It's not just for the good people. I have a lot of people who just know they're going to get a refund, and they just wait. I mean, you can wait.
Because if you get a refund, they don't penalize you. But after 3 years, you lose your refund. So that's, what happens is you kind of get in that mode where you just don't feel like doing your taxes, and then it's too late. You lost the money. Let's go back to the phone. We'll talk to George. Hey, George, how can we help you?
I'd just like to know, I've seen on a nightly business report that they're going to stop a benefit from Social Security in 10 days. That was last week.
Right.
And it was apply and suspend.
That's right.
Is that true?
That is
if
true.
You don't turn 66 before the 10 days, you can't apply for it.
No. That's the apply and suspend. So let's say that a husband wanted to let his wife start collecting, and so he starts and suspends. She's collecting on his, but he's going to wait till he's 70. But that benefit has stopped. Will stop it did stop, or it stops at the end of this month.
Yeah,
end of April. Yeah. End of April.
One of my clients asked me about that, and I asked Chris, and
so it's.
I mean, the main person can still do apply and suspend.
Right up till the end of
April.
April, yeah.
But I don't turn 66 till later. I can't do it then.
No, you're at the age that you're eligible for retirement. You can apply for your benefits so that your wife then would be eligible if she's 66. Okay, and then you can suspend right after that. Stop having anything withheld, and she'll be collecting on your benefit. Then you can start collecting.
I'm just talking about me. There is no spouse. I'm just
no. This the only benefit is
suspend later on this year.
Yeah. Well, why, if you're going to not collect, why would you apply and suspend?
Oh, you don't know that theory? See, I just heard about this in the last year. You apply and suspend in case something comes up. Then you can go back. Say you win a year and then you had a problem. You needed money. You could go back that year. But if you don't apply and suspend, you can only go back 6 months.
Okay, well, what I'd suggest you do is give them a call, because the benefit for that is expiring the end of April.
Yeah, that's why I just happened.
So call Social Security. Call Social Security on Monday.
Yeah.
Okay.
The other thing is, what's the rate for Social Security, and the cutoff for Social Security is 6.2 and $107,000.
$118,000 something.
$118,000. It went up or something.
I believe it's up there quite a bit now. It used to be. It used to be 98, and they keep raising it. I know at one time it was 109. I believe it's 118 coming up, and Esther's quickly trying to find it.
For 2008.
6.2% is Social Security, right?
Yeah, 6.2% is Social Security.
And Medicare goes on forever.
And Medicare never stops.
It's 2.9.
So all those people after 118,000, they get a 6.2% raise every year.
Correct.
Yep.
Anything beyond that amount.
Sorry for him, you know.
Right. Anything beyond that amount.
Yeah.
And so I think that once we're off with you, any other questions?
It's 118.5.
It's 118.5.
118.5. Okay.
Right.
Okay, thank you very much.
You're very welcome.
Thanks,
Bye-bye.
Chris.
But I'd suggest anybody that's interested in the Social Security apply and suspend program that's going to stop the end of April, you want to make sure that you do it before the end of April.
Yeah.
Right? And then we're going to go to Murray. Oh, well, you know what, Murray, we're going to have you wait. And anybody else that's calling, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be right back on the other side. And who's this, Tyler? I'm
that's-
Esther Gullius, the tax lady. Yeah, who's this, Tyler?
The Foo Fighters.
The Foo Fighters?
Yeah, they fight Foo.
They fight Foo? Or they fight for the Foo? I'm Esther Gullius, the tax lady. We're talking about taxes and money, and we're kind of previewing what we're going to be talking about the rest of the summer. We're going to talk about, we said, insurance issues, health insurance, Obamacare, liability, exchanging your property. We're going to have an exchanger on so you could actually have like 5 rental properties in Buffalo and say, you know what, I think I'd like to go down to Fort Lauderdale.
Right.
And you can actually take those 5 houses, sell them, use an exchanger, and buy maybe one great place on the ocean in Fort Lauderdale and not pay taxes. And we're going to talk about that this summer.
Yep.
Right? All right, we had Murray waiting so long. Hey, Murray, how can we help you?
Hi. I've waited almost 2.5 years to get Social Security disability.
Okay.
And I finally got it in January.
Yay, good for you.
I know. And it was $39,500,
Okay.
let's say, and some change.
Right.
So do I have to pay taxes on that next year?
Maybe. Tell me something about your situation. Are you a married lady or single?
I'm married.
All right. Now, does your spouse have income?
Yes, but we file separately.
Okay, well, that makes it even worse because
Did
do you live together?
No, not
All right.
at this
All right.
time.
So if you don't live together, all right. So if you don't live together, that's good for this purposes. So
Okay.
do you have any other source of income besides the Social Security?
No.
Then it's not going to cost her anything.
Nope. Nope.
So-
You have no pension, no
Right.
savings where you're earning interest.
No
I
IRA
used it all
money.
When I got laid off from my job, I used that. That's what I lived on.
All right.
And that's how I paid my mortgage.
All right, so here's what we're thinking for everybody to know. Because effectively, if she had lived with her spouse, then 85% of that Social Security would have been taxable because she's married filing separately. But because she didn't live with her spouse, then that rule doesn't come into play. So now she would have to take half of her Social Security, and it would have to exceed $25,000.
Yeah.
And it doesn't. So
Now, anybody who's listening who is living with their spouse and gets this benefit that Marie is talking about, you might do a lump sum election. So.
right, that would have been something that I would have gone for because there is a lump sum election where you can base this year's Social Security payment on previous year's income when you probably didn't have much income. But in your situation, Murray, you don't have to worry.
You're going to be fine.
Great.
All right?
Okay. Thank you so much.
Thank you. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Yeah, Tim.
Hey, Esther, I was wondering, do you think she should file a return indicating that she's married and that she doesn't live with her spouse?
That probably wouldn't be a bad idea, would it? Because they would look at that, and with his, because it all depends if he's filing a tax return,
Right.
listing her as married separate. They might think that she would pay 85%.
Yeah.
Yep.
Wouldn't be a bad idea.
That's what I was thinking.
Yeah, but even at 80, even if it was 85% of the 40, it'd be 32. And only half of the excess over 32 would be taxable. So she still wouldn't have any liability.
Right,
if she's
right.
married separate. Okay, and then, all right, other things that we're going to talk about this year, we're going to talk about, obviously, taxes, right? We always talk about taxes. We want to talk about how gambling negatively affects your tax return, even if you lose the money you won.
That's right. People they have a really hard time wrapping their head around that.
Right, but
Yeah.
that's the way the law is written.
Yeah.
You know that if you have gambling income and you have to put on line 21, and even if you lost the money you won, especially if you're a senior, it can really hurt you. And the other people that it can, one of my clients wins like $300,000 a year gambling, but then he loses everything that he wins.
Right.
But unfortunately, the $300,000 on line 21 wipes out his ability to claim personal exemptions. He loses the child tax credits, and even filing separately doesn't save them that much money.
And if anybody went to college, he'd lose the college credit.
Right. And so, I'm not necessarily campaigning against gambling, but it really is a very serious thing that happens on your tax return.
Speaking of gambling and speaking of college, what about a college student who wins, they go to the casino and wins $10,000? I mean, that's now unearned income, and that means kiddie tax.
That's right. You have
So
to pay
then
it
the
at
parents,
rate.
yep.
And we've seen that. And so you really want to be careful of that.
And then the other thing is, speaking of education, we want to talk about how to get out of paying your student loans. Right? A lot of people aren't aware of this, that there is a way to have your student loan debt forgiven if you're working for a not-for-profit organization. Now, you might say, oh, well, that's like I got to be working for the Salvation Army. Not true, right? The hospitals are not-for-profit. The school boards are not-for-profit.
And I got to tell you, there's so many student loan holders, they won't volunteer this information. And I've seen it with my clients time and time again. And so you have to make the phone call, and you have to be proactive, and you have to be one step ahead of them.
And so people will say, okay, well, I've been paying my student loans for 5 years, and I'm a Buffalo school teacher, so I only got 5 more years to go. That's not true. It doesn't start ticking until you go and apply. So you have to make 10 years of timely student loans, and then your student loan debt is forgiven. So this is especially important for people that are kids that are graduating this June that might be going into the private sector. Try to choose the not-for-profit private sector jobs, right?
That's right, because then you might be eligible for these programs.
That's exactly right. And then other things we're going to talk about this summer is tax planning and all the different kinds of retirement income that you can get. Like, for instance, when to take Social Security, when to start your retirement, how to do your 401k, required minimum distributions, all of those kind of things that have to do with your tax return and saving money.
Yep. Or how about, before I retire, I want to pay off all my debt, so I want to take $75,000 out of my retirement account.
That would be not so good.
Such a good bet.
Because the thing is, you're in a higher tax bracket while you're still working, and quite possibly.
Well, and here's the thing when we're talking about people's credit. One of the things that are protected under bankruptcy is your retirement plans. And that's because even the people that wrote the laws knew that your retirement is holy. Yep. It's holy. And if you were somebody that did something that you ran up your credit and now you want to pay it off, really the last place you want to go to is your retirement account.
That's right.
You really ought to think about a bankruptcy.
Yes.
And I know people think, oh my gosh, but bankruptcy is going to ruin my credit. There happens to be a person that I know very well who had a situation where they had a rental property that went underwater in Florida, and they had to file a bankruptcy to get out from under. Two months later, his credit was right back to where it was because the creditors understand that once you're out from under the bankruptcy, now your credit's good and they will loan you money again. The truth is, when you're carrying around all this debt, and so that's why people say, okay, then I'll take the money out of my pension plan. But you can with some strategies here, you can keep your pension and get rid of the debt.
That's right.
And then promise that you'll never do it again.
Promise.
Right?
Promise.
And then some of the other things we want to talk about is how to strategize if you owe money on your tax return. Like changing your W-4s, or maybe if you're getting a gigantic refund on your tax return. We talked about this a couple of weeks ago with the identity theft issues. You just don't know what many states this year stopped sending out refunds because of identity theft, because they wanted the returns all to come in first and then they sent out the money. If you're somebody with a big refund, you might do well to change your W-4 at work so you get the take-home pay as you earn it.
And not to mention, there's life changes. You might be going back to college this year. You might have another child. Your child might have turned 17. So not only adjusting what you see on your return this year, but making amends for life changes that are occurring in 16.
Right, but specifically what I'm talking about is when you get a large refund.
Yes.
You're sitting there waiting for $8,000, $9,000, $10,000. There are, how many people would you say, Chris, are still waiting for their money from the IRS?
A lot. I mean, it's hard to,
if you're a victim of identity theft, you wait for your money.
You wait and you wait and you wait.
And if you're somebody like that has the 1095A for the Obamacare, you can wait and wait and wait for that. So why not consider what Auntie Esther's saying here? change your W-4 at work so you don't get a gigantic refund. Give yourself the refund every week as you earn it. So next year when you're doing your tax return, you get a small refund. So if you're waiting for $500 or $1,000, it isn't so critical.
That's right. That's right. It's really using your own noggin and using the money throughout the year.
Well, you know what it is many times? It's changing people's habits.
Mm-hmm.
And so that's part of what we do during the week. People can call us at work at 632-7886, and we're very happy to help you work through your W-4 so that you can submit it to your employer and start getting more take-home pay.
Give yourself a raise.
Give yourself a raise. And the bottom line is you're not apt to use your credit cards then because you have all of your money that you've earned during the week coming to you, and you aren't so short, right?
That's
just part of what EG Tax does. So and the other thing is during the year, if you think, Thelma, let's go buy a car, let's take the money out of our pension plan. We want to pay off our student loans. We're going to take money out of our pension plan. Use EG Tax as a resource. You can call us anytime, Monday through Friday, 9 to 5. We're there to help you. And we'll give you another way of thinking about it, which probably will save you, not only make you have a better balance sheet, but also help you with your taxes at tax time.
Yeah. Another thing is come in and do a budget. I can't tell you how many people in the summertime I'll do a budget, or before you retire, come in and we'll run the numbers.
That's right. I mean, we do retirement planning with you.
And another thing is, if you go to our website, you could click on Ask the Tax Lady, and I know you answer those questions.
That's right.
All the time.
I will tell you, you can be on the beach in the summer and have you can be talking with your friends and say, I've got a question. You can go to Ask the Tax. You can go to egtax.com, ask the tax question. It comes to me and I'll answer it almost immediately, if not sooner. I'll answer it before you send it to me. How do you like that? Okay. Well, anyway, when you guys get letters, if you have any problems, anything that you need in the tax realm, give EG Tax a call. There's no charge this time of year to help you. Until next week, I'm Esther Gulias with Chris Fabian and Tiffany Fabian. Have a great week. Bye-bye.